This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Joining us today is David Lenegas, the Executive Chairman of Vinanz, following news that the company have increased their Bitcoin mining capacity from the initial 20 miners now up to 120 miners. Well, David, last time we spoke, this is what you said you wanted to do. Now you've done it. You pleased with the speed that you managed to achieve this?
Yeah, good afternoon, Mark. Yeah, thanks for having a chat on Vinanz. Yeah, I'm pleased with the speed. I mean, we only just listed Vinanz a month or so ago. We immediately went and bought another 100 Bitcoin miners. A little bit of a delay through customs into Canada, principally because the machines come in from China, and I think everyone's a little bit spooked with China, particularly in North America, on a lot of imports. But the data processing facility in Labrador, they received them. They've installed them, and they're now spinning at pretty much 98 to 100% efficiency runs, and running exactly to expectation. So, we're very excited about how smooth the process went.
Okay, good. Now, how important is it for you as a company to consider the diversity of the operations and the data centers? And was there a specific consideration for Labrador for this specific center?
Well, when we went out with our consultants to find the next place to install our sort of decentralized miner cluster, Labrador sort of popped up as a prime area for consideration, principally because of the power price. A lot of running a Bitcoin cost-wise is power, and Labrador pulls a lot of its power from Quebec Hydro at very cheap rates. So we got our power on a long-term contract with this data processing group at circa 6 US cents a kilowatt hour. And that will probably sway us to Canada for the next cluster installation, which we're working on at the moment. Hydropower, clean, green power is cheap in North America, and a lot of it is long-term contracts. So, yeah, I think Canada might be our next sort of rollout area for the next sort of couple of clusters.
So clean, green power, and obviously as cheap as possible. What are the next steps? Then you talk about another data center. What's the main ambition and focus of the company for the moment?
Right. So right now we've got 120 miners spinning. We're generating, in round number terms, about $1,000 US a day, which is good from our Bitcoin mining operations. Our priority is to get as many miners spinning as we can get between here and the next halving, which is sort of due in April next year. At the moment, you've got Bitcoin sitting at around about $31,000 US a coin. When the next halving comes, a lot of the people in the crypto sphere are estimating the Bitcoin price. I mean, some people are calling Bitcoin prices at $150,000 to $200,000 US a coin post the next halving. So really, it's all about how many miners can we get spinning and how many Bitcoin can we be generating. So our real plan is, okay, we've got 120 miners spinning. We're working on another 100 miner cluster. And then what can we do to grow this, in 100 to 200 minor clusters throughout North America between here and Christmas time. Ideally, if we had the capital backing to do so, we could see 1,000 to 1,500 miners spinning, in North America. That's sort of what we'd like to try and achieve.
1,000 to 1,500 spinning, ideally before Christmas or before the next halving?
No, before Christmas.
Okay. You talk about if you had the capital, obviously that is a consideration to, is it possible
we listed with a small capital raise. We wanted to get on the dance floor. We're talking to some leverage finance people in North America who specialize in this space.
Okay.
It's all a matter of mathematics and calculations and and how best to sort of lever the capital base that we've got to sort of increase our Bitcoin mining capacity. We certainly have the funding available internally to roll out another $1,000 to $1,500 a day US of revenue, and then we sort of take it from there. So yeah, it's really just a big mathematical calculation.
Okay, and that $1,000 US that's currently being generated per day, that's revenue. So what's the profit on that?
Well, the profit, operating costs are less than 50%.
Less than 50%. Okay. So there's a decent margin on there.
Yeah, and as the Bitcoin price continues to rise, the cost per coin, the margin really
indeed
increases. Yeah,
and the more miners you get on stream, obviously you'll also get that cost down a little bit more as well, just by virtue of scaling up.
Yeah, and if we see Bitcoin going back up to sort of $40,000, $50,000, $60,000, $70,000 a coin, I mean, it's really an exponential growth for us on revenue versus costs.
Okay, so ambition to have that sort of 1,000 to 1,500 miners in before Christmas.
Yeah.
What's the plan with the Bitcoins that you're mining then? You keeping them? Are you looking to liquidate them at a good price, or what's the plan?
Keep them in the wallet. I mean, we can pay for a lot of things with Bitcoin. We can pay for monthly operating costs. We can pay for new Bitcoin miners. A lot of these data centers have Bitcoin mining customers that can't pay, who have gone elsewhere. Mm-hmm. We can buy a lot of stuff in this Bitcoin space with our own Bitcoin. So it really is a solid currency. And then when you look at, the news that BlackRock came out with
Indeed.
Last week, that they're looking at launching a spot ETF, and they've put a submission into the US SEC, which surprised the world a bit, which sort of saw the Bitcoin price leap from $28,000 to $30,000. You get the likes of BlackRock, the world's biggest manager of people's money, setting up spot ETFs in Bitcoin. And if the lads decide, if the regulators decide to let that in, I mean, that's going to have huge impact for credibility of Bitcoin in the financial sector.
Indeed, that was a very significant announcement from BlackRock there. So I think the future for Bitcoin is certainly here to stay. Just thinking on your numbers there, if you manage to get sort of, let's say, 1,000 before Christmas, you're really looking there, are we sort of circa $10,000 US per day revenue?
Pretty much.
Roughly,
well, yeah. I mean, what are we talking about? 100 miners gets us around about 800 US at $30,000 a coin, $29,000 a coin. It gets us around about $800 to $900 revenue for 100 miners. So you can pretty much work it out.
Indeed. Okay, well, that's good to hear, David. So we'll see how things progress throughout the rest of the year, getting those extra miners.
The other thing too, Mark, is our advisors put in our application to US OTC markets this week too. That's now gone into OTC markets. So hopefully we get some movement on that from a regulatory sense, and we can get our shares traded on in the US.
In the US, yes, and the US will hopefully give you a lot more liquidity because
in the next month or two, yeah.
Indeed. Okay. Any plans for the company sort of outside of crypto, outside of exclusively mining? Any other interest in the crypto space in general, or is it mostly focused on getting those miners spinning up and getting Bitcoin in the wallet?
You've got all the Doge coins and the WhatsApp coins and everybody else's coins and bank digital currencies, but at the end of the day, it all revolves around the reality of what Bitcoin really is. So we want to keep this a clean, pure exposure for shareholders into the Bitcoin mining sector, Bitcoin sector, full stop.
Okay.
So we're just focusing on Bitcoin, mining Bitcoin, and mining more of it.
Okay. Fantastic. Well, thank you very much for your time today, David Lenigast, Executive Chairman of Vinanz.
Great. Thanks, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.